price of Bitcoin enters a consolidation pattern moments away from breaking out after an impressive 7% week here on crypto's flagship. What is in store for the week ahead? What do we got to look out for? And how do we prepare to take the best from what is about to happen? As you can see here, guys, this is the beautiful chart that we've been monitoring here on the weekly. Bitcoin looks nice after delivering a powerful 7% week here today. We are hours away from closing an impressive weekly candle. Now remember, a lot of people got frustrated over the last couple of weeks, 3 weeks of indecision here on Bitcoin. But what did I keep saying? I said, guys, this is really good. The indecision here is us holding such a good level. Yes, 29k was difficult, so what? And I kept shouting, be patient, guys, be patient. And thankfully, this week, we got a nice move ahead, but it's not just about the nice move. The macro landscape came in clutch this week, right? Whether you look at the CPI figures, whether you look at the jobs figures, we're starting to see an improving trend, and the market is focused on the idea that we could have one more rate hike, one final rate hike in May, and then the Fed can go away. We can have a pause in June and things can start looking upward for crypto and specifically our portfolios. So that brings me on to the notion of, okay, so many people have been asking, how do you build this portfolio? I'm going to touch upon that a little bit in this video. Now, of course, that's going to need a full detailed breakdown. You can't just cover that in one video. I will be working on a free course, guys. Just like my TA course, Ijaz.uk/TA is free. I've not charged thousands and thousands of dollars for a course like other people do. It's free. Go work for the TA, learn EMA ribbon, Fibonacci ratios and all that stuff. I'm going to build the same. I've committed to building the same for building the perfect portfolio. So I will be doing that. It just takes time, guys. It takes hours and hours and hours and hours and days to build a curriculum for you guys and a structured content and film it all for you guys and then to disseminate it to you guys for free. So make sure you watch the TA course so when the portfolio one comes, you'll be ready. Now, before we do that, on the hourly chart here, Bitcoin needs to get some attention from us because it's consolidating in this pattern. I need you guys to be aware about it. If you've watched my video from late last night, you will know that I spoke about the fact that we could get a little bit of a cooling down, right? And the cooling down could come from this structure here. If we break to the downside of this structure here on the hourly, it might look horrible, but if you zoom out to the 4 hourly, I want to show you why we could be doing this. Look at that on the 4 hourly. We're sitting on our EMA ribbon. This is not definite, right? If we do get a pullback, I'm going to show you why that's okay and the key levels we're looking for. But we can also bounce from here because as you're seeing, the 4 hourly EMA ribbon could act as support. And we've seen Bitcoin's been on crazy momentum. It's not needed much support here over the recent past. It just keeps moving. So what could happen is we could get another move to the upside. And again, the price target would sit at the top of this wedge at 31,162. Okay, 31,100 roughly here on Bitcoin if we break to the upside here on that pattern. You want to look at it on the hourly, but I'm showing it to you here on the 4 hourly. Now, if we break to the downside like this, then I want you to zoom out to the daily chart and see why that's not the end of the world. See that arrow I drew testing the 4 hourly EMA ribbon? Yeah, on the daily, we are so super extended from our EMA ribbon that it's perfectly normal and healthy for us to come down here and retest our EMA ribbon. It won't sound fun coming down to 28,800, but be prepared for it, right? Don't panic. A lot of people are going to panic. There's a lot of free and greed in this market, and a lot of people can get liquidated on these extended moves where they FOMO in. Never FOMO in. Like, if you guys are watching my content, there's no reason for you to FOMO in here when there's such, like, breathing room between the EMA ribbon. Such a simple way to know when to buy and not to buy. It's like, if there's breathing room between the EMA ribbon, that's FOMO for me. Don't FOMO in there. Let it come into the EMA ribbon and it justifies it. So even had you have bought here, right, and then versus here, I respect you more even though the price is the same. Why? Because the EMA ribbon's coming up to give you support here. It's consolidated. It's at the end of its triangle at this point, right? Whereas when you're buying here at the peak, you're FOMOing. Big difference. Hopefully you pick up on that, guys, okay? Really important. So that brings me on to then, how do we talk about our portfolios? Because building a portfolio is something everybody needs to be thinking about. We spoke about dominance. In fact, let me just show you that because I need to help you guys understand that this dominance is deciding on something. We had a crazy week for Ethereum, right? Ethereum had a crazy week in which a lot of people thought it was going to dump after the unlock. We said here on this channel, I don't think it's going to happen, and it didn't. Ethereum went on a crazy run, a 12-13% week on Ethereum. But what does that mean for dominance? It meant dominance struggled this week. It had a crazy volatile week. It tried to break out and it got thrown back down to the downside. So if this dominance continues to come back to the downside, if we see altcoins continue and Ethereum continue to move this week, that could lead dominance to start coming back down towards trend. And even if it breaks trend, then you're looking at 39%. And that could lead to a crazy run on altcoins. Now, if you do not have your portfolio set, if you do not have your vegetables, Bitcoin, Ethereum, and then your selection of altcoins, you're missing out on either of these moves. You're either going to miss the Bitcoin Ethereum move because you've just got altcoins, or if you've just got Bitcoin Ethereum, you're just going to be like, I don't really care about altcoins, I'm a Bitcoin maximalist, and you're going to miss out on those as well. There's no need to miss out on anything if you build a structured portfolio. Now, when building a structured portfolio, there's a few things you need to think about. And the first thing we need to think about is narratives, right? Of course, when you're building a portfolio, you need to look at it and say, do I have represented in my portfolio all the narratives I believe in? And again, we can go into this for hours. I can talk to you guys about this for hours, and I will build it into the course, I promise. But for those of you who want it right now, and I've had messages in the Discord, in the Telegram, etc., saying, guys, give me this. I need to structure. I want to build my portfolio. You want to have those narratives. So when I say narratives, you start with Bitcoin as a, as the commodity, as a safe thing. Then you go, okay, I need smart contract platforms. Ethereum, fine. That's our veg, right? Bitcoin, Ethereum. Then what are your other narratives? What are the layer 1 solutions do you like? What other layer 2 solutions do you like? Scaling platforms, right? So you should have a segment of your portfolio, and it's for you to decide the percentage. I can't tell you the percentage. Every person's portfolio will differ from somebody else's. If I give you my exact same portfolio, you will not have the same returns as me. Why? Because you will panic sell, because you won't have the same conviction as me, right? You hold on too long to certain. You get married to certain bags. You've got to be able to hold your own conviction and build your own portfolio. So you want to have layer 2 sections in there as well. Then you want to say to yourself, okay, what do I want in terms of data oracles? Do I have anything in terms of data oracles? Do I have anything like Chainlink in there? Then you want to look at, okay, what do I have in terms of, do I have enough proof of work and proof of stake layer 1s, right? There's so many different narratives you want to think about. And then a small part of your portfolio, be like, what about if gaming does pop off, right? What if NFTs do pop off? Do I have any exposure to some of those projects as well? Do I have any second derivative plays? Now, for me personally, I don't like getting into this, what I call second derivative or ecosystem plays, until we're a bit more deeper into a bull market. Now, that's going to limit my returns, but that's personally based on my portfolio, because I just don't want to take as much risk given the amount I'm playing with right now. So then you want to ask yourself, with the ecosystem plays, and by the way, just to explain what I mean by that is, let's say you're invested in Phantom as a layer 1 solution. What about the platforms underneath Phantom? What about the DEXs in Phantom? What about the DeFi plays in Phantom? Do you want some of those? Now, of course, they're going to be slightly riskier because the market cap is different. And that is where people go wrong. Because they build out their portfolio, they have all the projects they like, but they never give themselves a sense check of the split between market cap. And this is where people go fundamentally wrong. And one thing I've done here is I've built out the perfect crypto portfolio analyzer. You go in, you put your portfolio in here, you enter how much you have of each one, what percentage you have of each one, and it spits out to you whether you have a good split between mid cap, small cap, large caps, and it advises you what to do. It gives you a verdict here, right? You need more mid caps, you need more small caps, etc. It breaks it down for you. Now, I'm going to give this out for free if this video gets to 10,000 views. I'm not giving it out for free if people are not watching this type of content. If everybody just wants, oh, look, Bitcoin price going to 100,000, I'm not going to put in the work to do that kind of stuff and give it out for free. No. If we can show that we're watching the serious content, if we show that we're being pragmatic and sustainable, which is why I've been making content for years here to stop the moon boys, if we can prove that we're going to not click the clickbait stuff and watch the real stuff, I'll put that out for free to you. That's my commitment. I'll share that with you guys for free. We've got to get this video to 10,000 likes. You guys can do that. You guys have the means watching this video to get this to 10K. It's whether you share, it's whether you retweet, it's whether you watch the video, it's whether you like and comment on it, right? And then I'll give that out for free. You guys can have it as your own portfolio analyzer. So any moment in time, put your portfolio in there. It will tell you, am I sensible? Am I balanced? Is it right? Does it feel right? Because that's important. So we spoke about narratives. We spoke about split between caps. Now we need to talk about conviction. Because you can have the first two right. You can have all the narratives in there. You can have all the split between the caps. It's a perfectly balanced portfolio with large caps and some small caps in there that could do 100x's, 200x's, 300x's, and obviously your safe Bitcoin and Ethereum. But what if you don't have conviction? What if you have a bunch of plays which you went onto CoinGecko, which, by the way, I'm going to show you this as well. This tool here is going to be a game changer for you when building your portfolio. Again, I'm going to go through this in detail when I make the course, but I just want you guys to have this data now. So go to CoinGecko, click on categories. Click on categories. I know a lot of you know this, but a lot of you don't. And these are the narratives I'm talking about. When I was saying layer 1s, layer 2s, and all these things, these are the narratives. You've got them all listed here for you. So you go through here and you say, okay, layer 1. Let's start with layer 1s. Click into layer 1s and straight away just sort it by market cap, right? Sort it by market cap so you can see the biggest projects to the lowest, right? Because you don't just want small projects and you don't just want big projects. And then you say, okay, from the first couple here, do I have enough exposure? Next couple, who do I want, right? Who do I want in the next few? And you get a good exposure. You want some smaller ones, like a Phantom, right? Sitting at 1.4 billion in market cap, but equally you want Ethereum, which is 250 times the size of Phantom. And that's how you do that. You then go back and you say, okay, what about one of these other ones? What about, do I have enough DeFi projects? You click on DeFi in your portfolio. And you click on, okay, within DeFi, what do I want? The $12 billion market cap project is Lido, right? Do I want some Lido? Do I want some Uniswap, the biggest decentralized exchange? Do I want Chainlink, although Chainlink might fall into your data oracle side of things, right? And then you build out your portfolio. Really, really important that you do that. And again, it doesn't work without conviction. You can have all the things right. If you don't have conviction, you're going to panic sell. When the market moves against you or we go into another bear market, you're going to panic. So it's really important you have those splits right, you follow that methodology. If you're new to crypto and you're very, very new and you don't want to go into building that portfolio, this is a slight intermediate move. Now, of course, you can do it as a beginner. I kind of started out nibbling on a few of my favorite projects, right? Just start off with a simple portfolio. Just start off with some Bitcoin, some Ethereum, and pick 2 or 3 other plays and call it a bundle. Now, I'm going to leave the link in the description for a bundle, a starter bundle that I use on Bybit. You guys can click that and it will just copy and paste that bundle for you guys, right? But you're starting off with a bundle, and that's a good way of starting. And you set up a recurring buy every week, which is called DCAing, to slowly build your portfolio over time. Now, when you become a little bit more intermediate, okay, now we want to make our portfolio a little bit more robust, right? I've got some serious money in there. So I need to make sure I've got enough of the different asset classes that I want. I've got to make sure it's diversified. I've got to make sure that if any one given project fails, I'm not out of the game. There are so many people that had Terra Luna as 90% of their portfolio. How do you let that happen? How do you let that happen? Because you do not follow guidelines. You let any one given project become too big a part of your portfolio. And it can easily happen. Let's say you followed everything I just said here. This is going to definitely be in a separate video as well. This is about taking profits, right? That's a separate conversation we need to speak about. But let's say you did everything we just spoke about in this video. You got the perfect portfolio. And in the next bull run, one of your projects, 1000x's and goes crazy. So it's gone from being 2% of your portfolio to like being a big part of your portfolio. It's like 60% of your portfolio, 2/3 of your portfolio. And you swear by this thing. You've got conviction. You love it. Well, conviction's only going to get you so far. You need to be smart as well. Why would you risk wiping out 60% of your portfolio because of one project? Because one Do Kwon person can come out. Because one project can fail. It's not worth it. It's not worth it whatsoever. So you've got to get into the habit of trimming those profits. And again, I'm going to make a video on exactly how I trim profits. There's particular strategies I have on how and when I do so. Guys, if you appreciate this content, make sure you're sharing, make sure you're tweeting this out so people can see it. Otherwise, we're just going to do more TA videos because I know you guys appreciate that as well. But I wanted to blend that in here on a Sunday to hopefully give you a little bit of a different perspective. Thanks for watching, guys, and I'll see you in the next one.